So are there any companies that are still paying dividends? Well, there's plenty of companies that are not paying dividends right now, or they've lowered them, or they've deferred them. There is still plenty of good companies that are still paying dividends right now. My criteria for choosing dividend companies are the same no matter what the market situation is, and that is to choose high capitalization stocks. Stocks that have a dividend yield of 5% or more. They have a high dividend stability, means that I can rely on what dividend payment I'm going to get. So I like a nice, simple company without a lot of surprises. I like to know what dividends I can expect so I can plan my income. So in the first half of this video, I'm going to go over my process on how I've narrowed down the companies that I've chosen for this video. I think that's going to be helpful because then you can see what I look for and my thought process when I'm choosing companies to purchase for myself. Then we're going to go through the 9 that I've chosen. Yes, I've chosen 9. There were actually quite a lot of great companies that fit my criteria, but I've narrowed it down to 9. So we'll go through those. And a quick disclaimer before we get started. This video is general information only. Make sure you do your own due diligence before making any financial decisions. I also can't guarantee that these companies are going to be paying dividends into the future. I feel that they will. There's a pretty high probability that they will, but I can't guarantee that. We can't guarantee what companies are going to do in the future. Okay, well, let's jump onto the computer and have a look at my process. Then we'll go into the 9 companies that I chose. First step is to get a list of stocks, and let's make it really easy on ourselves. Instead of going through all of the ASX 200 or the All Ords Index, let's go to this website that's already narrowed it down by dividend yield for us. I'm not affiliated with this website in any way. It just makes things easier. The website is marketindex.com.au. I'll put the address up on screen. If you go up to the menu to ASX analysis and then go to dividend yield, it'll give you a list of all of the dividend yields. They do a new scan about once a month. The results here are for June, so a few weeks out, but it's still going to be really useful. So this is what it looks like. I usually ignore a couple of the columns. I'm not interested in consensus, like I'm not interested in their buy, sell, hold recommendations. It's sorted by yield. The yield was current whenever they did the scan. The gross column is also taking into account franking credits if the company offers them. Not every company does. So I just grab this by cut and paste. I just highlight everything and I'm going to put it into my spreadsheet. Then just make the columns as big or small as you like. I always delete the price column because it's not useful for me determining dividend yield. I also don't need gross yield. I just want the flat yield. And of course, I delete consensus. So I'm left with just the company code, and the yield. The other columns that I like to add is dividend stability, seeing as that's important to me, which means, of course, we need to go and find the dividend stability figure for all of these companies. Luckily, there's not too many here because we've already narrowed it down. Starting at the top of the list, we'll go to Z Energy first. Now you just got to find where they list the dividend stability in your trading platform. In mine, it's under summary. It has a snapshot, including the dividend yield, dividend stability, ex-dividend date, if there's one recently, or whatever the last one was, and pay date, whatever the last one was. So if we grab the dividend stability here, 91.3, and go put it into our spreadsheet. While we're here, we might as well look at the dividend page too, just to get an idea of the dividends. This one looks pretty good, actually. If we look down, the final and interim dividends have been pretty stable, although I do notice that there has been none for 2020. So let's go and find out why that might be, why they haven't paid a dividend yet. That will always be in announcements. The company always announces when they're paying or if they're not paying. It'll be in some sort of investor presentation or results presentation. And scrolling through, I'm not interested in anything except the dividend announcements. I mean, it's all very pretty. And here it says no dividends to be paid for financial year 21, and they expect to resume dividends or distributions after financial year 22 or after 30th of September 2021. So yeah, they're not paying dividends until the end of 2021. So this is not a company that is paying dividends. So I'm going to make a note of that just so I have that in my spreadsheet. Next company is Air New Zealand. Their dividend stability is 83.3.
If we go check their dividend page and their announcements, they have started flying again, but it's going to take a while for most travel and tourism stocks to become profitable again. So it's not a stock that I would be going after right now. Next company is Yancoal. Their dividend stability is 100%. But as you can see from their dividend page, they've only been paying since 2018. I need at least 5 years, preferably more, of when they've been paying regular dividends. That's going to give you a better idea of what they're likely to pay. There's just not enough data here for me. So I'll add that to my notes. Next is Flight Centre, another travel or tourism stock. It looks like they have been pretty consistent, but they haven't paid since 2019. The dividend stability is 92.8, but they have suspended their dividends in the short term. So this video is not an hour long. I've gone ahead and done the rest of it, put the dividend stability in and put notes in and a yes or a maybe or the reason they might not be paying dividends. Such as most of the banks, I've included a wait until the banks resume dividends because a lot of them have deferred. Now this is just my notes, but if you want a copy of this actual page, I'll leave a link down below where you can go and download it if you want. I don't know whether it will be that useful to anyone, but just in case it is. So now I'm just going to grab all of the ones that I said a definite yes to, and we're going to narrow that list down again. So I've got 19 companies here, all of which are great. I actually think any of them could be on your watch list, but let's go in and try and narrow it down even further. Firstly, I want to get an updated dividend yield because these are about a month out of date. Not that it really matters, but I just wanted to get the most up-to-date yield. So Scentre Group's yield is 7.6% as of the 22nd of July. WAM Capital's is 8.1%. I'll go in and fill the rest. Okay, so we've got all of that now. Let's sort by dividend yield, highest to lowest. I don't need my notes anymore, but I do want to find out franking. Franking just refers to whether the company tax has been paid on that dividend or not. Some companies pay 100%, a fully franked 100%. That means the entire company rate of 30% tax has been paid, which means you don't have to pay that amount at tax time. Sometimes they'll have a reduced franking or a partial franking, and sometimes they won't have any franking at all. I tend to prefer dividends that have franking 100% if possible, or at least partial franking. It means that whatever my personal tax rate is going to be, depending whether it is above 30%, then I'll only have to pay the portion above 30%, but if it's less than 30%, I actually get a refund. So I'm going to go through and just add all of the franking in here so we can narrow down the companies even further. We've got a good mix of some that are 100% franked, fully franked dividends, some that are partially franked, and some that have no franking whatsoever, which will probably be the trusts, the LICs, and the REITs. So let's go through and just start deleting a few at the bottom that have the lowest yield. Nothing wrong with these companies, but if I'm going to narrow down the field, we might as well stick with those that are highest up on the dividend yield. We want the most we can get for our money, all things being equal. Again, I'm just narrowing down on income and not growth. But if you wanted to look at growth, that's perfectly reasonable. You could go and look at charts, and that way you might be able to narrow it down that way. So now we've got the top 10. Now the last thing before I go and have a look at these top 10 companies that are paying good dividends, most of them have franked, they've got pretty good yields, very high stability. There's one last thing I want to look at, and that is the debt to equity. I always look at debt to equity in the fundamentals. It's just a really good way to know how much debt that the company is holding. I don't like to invest in companies that hold a lot of debt, especially in a climate like right now. So as long as the debt to equity ratio is under 80%, I'm happy. If it's over 80% or if it's over 100%, then it's not a company that I will invest in at all. So I've just found one, AusNet Services. Their debt to equity ratio is over 300%. That means they've taken on a lot of debt. So it's not a company that I would invest in. So we're going to delete that company. So my top 10 has now come the top 9. Well, this video is already close to 10 minutes, so let's get through the top 9 very quickly.
So first up is Aurora. They probably don't have a dividend yield of 14.2%. I would say that's due to the interim dividend, which would have been a special dividend that they gave to investors. But they are partially franked and the dividend yield is probably around 6-7%. They're nice and consistent and they're a packaging company, so I feel like they've got a good future. Next is Centura Office, which is a real estate investment trust. They've been pretty consistent. They pay 4 times a year. I like companies that pay 4 times a year. Trusts tend to do that. So a really good dividend yield and nice and stable. I like them. Next we have Cromwell Property. They pay 4 times a year also. They've dipped a little bit, but they're still paying very consistent, very high dividends. I like them quite a lot. Next, we've got WAM Capital. They've been super consistent. The next dividend payment is in November, and the ex-dividend date is also in November. So if you want a guaranteed dividend yield of 8% or less than 8%, you can get in before the ex-dividend date if you wanted that dividend. That's a guaranteed one. Scentre Group, nice and stable yet again, still increasing, still paying. Nice dividend yield. What's not to like? The only thing is that they have no franking. I think the dividend yield more than makes up for it. What's next? Abacus. Again, they're still paying. The dividend yield is great. They're nice and consistent, not franked, but a good income company. Nine Entertainment is next. Really good dividend yield, nice and consistent. I can't see why they wouldn't pay again in October. AGL has dropped a little bit, but they're still really high for a dividend yield. Can't see why they wouldn't pay in September. I'd probably want to wait until they make the announcement closer in August, but I can't see what they wouldn't pay. They're an energy company. Energy companies are doing just fine right now. And rounding out the top 9 is Horizon Holdings. Their dividends are not as consistent. As you can see, they're a little bit up and down, but their dividend yield is still not bad and they're still paying, and I can't see why they wouldn't keep paying. So those are my top 9. Thanks so much for watching this video. I hope you found it useful. Do you agree with the 9 companies that I chose? Were there any that I skipped over that you particularly like? Leave it down in the comments below so we can discuss it. As usual, thank you so much for watching. I will see you in the next video. Take care, stay safe, and stay healthy. Bye.